The difference between getting selected and getting rejected in a P2P or accounts payable interview is usually 3 to 4 questions. Most candidates fail at scenarios like duplicate invoice, price mismatch, invoice without PO. These are daily problems for an AP team. In this video, I will walk you through 20 questions with answers so you don't freeze in the interview room. So let's begin. Question number 1. What is the role of a person working in Procure-to-Pay P2P accounts payable department? This question is generally asked to the candidate to understand if he understands the role and responsibility of the P2P or accounts payable team. So here is the answer. Key responsibilities of P2P accounts payable team are ensure all vendors invoices are processed on time after receiving of material and service. This is one of the critical KPI which is assigned to the P2P team. Second, while processing invoice, ensure that quantity and rate mentioned in the purchase order or agreement matches with the invoice issued by the vendor. So this is the control, and this is called as three-way of matching. That means if the order says that per unit rate is rupees 5, the invoice should also be billed for 5. You can't have a difference. You can't pay excess. Third, ensure that no invoice is processed without goods receipt note, that is GRN, prepared by business. That means in case of material purchase, you need to do the GRN, that is good receipt note. It is an acknowledgement by the logistic department that they have received the material. Then only the finance team should process the invoice and release the payment. Next, prepare frequent reconciliation of creditors to ensure that there is no open item outstanding. And the last is ensure vendors are paid on time as per the payment terms agreed. Question number 2. Explain the complete process or complete flow of procure-to-pay process. So it starts with purchase requisition, that is PR, is raised by the requester. And once it is raised, purchase department collects quotation from different vendors. After that, after finalization of vendor, purchase department issues purchase order to the vendor. So purchase order is equal to a legal agreement. Next, vendor supplies material and services. After that, goods are received and GRN is prepared by the store or receiving department. And after that, accounts payable team verifies the invoice with GRN and rates as per the PO issued. And finally, after verification, accounts team will account the invoice in the accounting software and release the payment to the vendor on due date. Question number 3. What is a purchase order? So a purchase order is a formal document issued by a buyer to a supplier outlining the material and services to be supplied, quantities, agreed prices for products or services, and payment terms. It also provides information about the timeline by when and where the material or services to be supplied. So this is the legal agreement between the buyer and the supplier. Now next question. What are the key components of a purchase order? And the interviewer generally try to examine whether you know what are the details you will find while you go through the PO. Now, the key components include order number, supplier information, delivery address, billing address, items requested, quantities, prices, terms and conditions, and payment terms. Question number 5. What is a blanket purchase order? A blanket purchase order is an agreement between a buyer and a supplier to purchase a specific amount of goods or services over a while at an agreed upon price. That means you don't fix the quantity, you only fix the rate, and whenever there is a need, you will be placing the order. Question number 6. What is a three-way match? And this is very important for a P2P team candidate. Three-way matching is an accounts payable process that compares an invoice to the corresponding purchase order and delivery receipt to ensure that all details match. It is a standard practice that helps protect against fraud, incorrect invoices, and overpayment. So I explained the same in question number 1. So when the finance team processes the invoice, they need to ensure that the invoice matches with the contract. It could be your purchase order or a legal agreement. The rate and the quantity has to match with the invoice. Otherwise, the finance team has to raise a concern to the purchase team or to the vendor. Question number 7. How do you handle discrepancies in invoices? So discrepancies can be handled by communicating with the purchase department and supplier to resolve any differences. If the rate in the invoice is not matching with the PO, then the payment has to be blocked immediately. And after all clarification from purchase department and supplier, the payment has to be released. Wherever required, credit note has to be collected from supplier. Question number 8. What is an accounts payable aging report? An accounts payable aging report shows the outstanding invoices grouped by periods. Example 30 days, 60 days, or 90 days past due. And it helps the finance management team to understand the reason for not making the payment for these invoices. So if there is any discrepancies and you do block of that invoice, then in that case, the invoice will be pending for payment. And in the aging report, definitely it will show that it is pending for payment. Sometime in practical scenario, what I have seen is that either you would have issued a debit note or the supplier has given a credit note, but you are not clearing that credit note with the outstanding invoice. In that case also, the invoice will be outstanding for more than 60 days or 90 days. So the management should look into each and every line item and ensure that all line items are cleared with payments, or if there is a TDS deduction or there is a short payment, all has to be adjusted. What is vendor reconciliation? Vendor reconciliation is a process that compares a company's internal payment records to vendor statements and invoices to ensure that all records are accurate. The goal is to identify and resolve any discrepancies between the two set of records. So this is very important, and most of the P2P team ensures that key vendors are reconciled very frequently so that there is no differences between the books. It's not happened that the vendor is supplying the material and there is a lot of delay in accounting from your side, or you are making the payment and the vendor is not recording the payment. So you have to ensure that specifically big vendors with whom you have good amount of transaction, you are reconciling those accounts very frequently. Question number 10. What is vendor balance clearing and why it is should be accurate and why it should be accurate? So vendor balance clearing means the payments made to vendor has to be knocked off with the invoice outstanding. After clearing the respective invoice, it will not show as pending for payment. Wrong clearing can lead to duplicate payment to the vendor. That means whenever you're making payment, ensure that the payment entry and the invoice is cleared. That means the same invoice should not be shown as outstanding going forward because you are making the payment. Now, if you do a wrong clearing, that means instead of clearing with X invoice, you cleared with Y invoice, then X invoice will be shown as pending, which is wrong. So you have to ensure that the clearing happens properly. Question number 11. What are different GST charged by the domestic vendors? If the vendor is located in the same state where buyer is located and the buyer receives the material in the same state, then the vendor will charge SGST and CGST. If the vendor is located outside state and supplies material or services from outside state, then the vendor will charge IGST. Question number 12. How is the GST tax credit entry posted in accounting system? Very tricky and very commonly you will find this question if you are giving an interview in India. Entry to be posted at the time of processing invoice. So inventory will be debited, SGST input credit will be debited, CGST input credit will be debited to supplier. And the assumption here is that the company can avail or take credit of this input credit. If you can't take credit, then you have to add those tax GST amount to the inventory value. Question number 13. What is the accounting entry for material purchased from XYZ Limited? Base price is 10,000. SGST and CGST charged rupees 900 each, and total invoice value is 11,800. So here is the entry. Inventory account debited 10,000. SGST input credit 900. CGST input credit 900 debit to the supplier account, that is XYZ Limited, 11,800. And here, if you are not allowed to take credit, then 900 plus 900, 1800 will be added to inventory cost. So inventory will be debited 11,800 if you are not eligible to take the GST credit. Question number 14. How to account if GST is not creditable? Tax credit can't be availed. So I explained you in the previous slide. If GST credit can't be availed as per GST law, then the GST amount payable paid to the vendor has to be charged off with the inventory or service cost. Question number 15. What is the accounting entry for professional fee invoice received from XYZ Limited? Basic price is 50,000. SGST and CGST charge is rupees 9,000. Total invoice value is 59,000. As per GST law, GST paid on this invoice is not creditable. So this is an assumption that you can't take credit. How will be your accounting entry? So in this case, the entry to be posted is professional charges debited 59,000 to XYZ Limited 59,000. And here if you see, no amount goes to the input credit ledger because you can't take the credit. So as you are not taking the credit, the amount what you pay to the vendor is a cost for the company. So it has to be added to the respective expenses. So here professional charges is increased by 9,000. That is the cost incurred towards GST. Question number 16. What actions to be taken if the vendor has not filed GST return even after payment is made to the vendor? So the law is very clear. Unless your vendor files the return, you can't take the credit, even though you have made payment for it. The buyer can't take the GST tax credit unless the vendor files GST return. During GST credit reconciliation, if it is found that the vendor has not filed the return, then immediately the finance team has to communicate the purchase team and supplier. Close monitoring required till supplier filed the GST return. Question number 17. What is TDS and on which invoices TDS is applied? So TDS stands for tax deducted at source. Income Tax Act has defined certain materials and services on which TDS is applicable, and TDS is deducted at the time of credit or invoice accounting or payment, whichever is earlier. Question number 18. What is the accounting entry for TDS deducted on legal fees at the rate of 10% and invoice value is 1 lakh? So this is the entry we are going to post. Legal fees account debited 1 lakh. To TDS payable, this is the amount which you are going to deduct and remit to the government, that is 10%. So 10,000 is credited. To supplier account 90,000. Then you are going to issue the TDS certificate. Form 16A will be issued to the supplier and supplier can take credit when he files the tax return. Question number 19. What is restatement of foreign vendors liability on reporting date preparation of financial statement? All foreign vendor invoices are accounted based on Forex exchange rate applicable on the date of posting in the accounting software. The liabilities will be restated on the closing date on which the balance sheet is prepared, considering the closing Forex exchange rate. Few companies take exchange rate published by central bank. Now coming to our last question. XYZ Limited received a professional fee invoice from USA vendor for $1,000. At the time of accounting the invoice, the USD rate was rupees 80. The invoice is payable to vendor on 13th of April. On the date of preparing the financial statement, that is 31st March, the closing USD rate was 82. What accounting entry to be posted for the restatement of vendor liability? So entry to be posted at the time of processing invoice, it was 80 per dollar. Hence professional charges account debited 80,000 to XYZ Limited 80,000. Now entry to be posted on 31st March, increase in rate at the rate of 2, right? Because from 80 to into 82. So now you have to increase the liability by 2 rupees per dollar. So here as you have taken liability of $1,000, so 1,000 into 2 is 2,000. So you are going to post an entry unrealized forex loss account debited 2,000 to XYZ Limited 2,000. So here if you see, it is parked under unrealized because you have not incurred that loss. But yes, on this date, if you would have paid to XYZ Limited, then this unrealized forex loss would have been converted to realized forex loss. So this is all about the questions which I thought of sharing with you, and these questions are very frequently asked in the P2P interview. Let me know in the comment box if you have any other questions in your mind which I can answer for that. If you have not yet subscribed to my channel, request you to subscribe to this channel. Share this video with your friends so that they get benefit, and all the best for your interview. Thank you.